Hello good people, it's me Kumanawa, your money manager. In today's video, I'm excited to share with you top 5 dividend paying stocks in Botswana. If you're somebody who is investing in stocks and you're looking to create income through stocks and that income is going to come in the form of dividends, then this video is for you. Please pay attention to this top 5 and remember that these top 5 are as at the 21st of March 2025. I'm putting a date stamp to this because this information is changing. As the share price is changing, some of the information is changing, so pay attention. But before I share the top 5 dividend paying stocks, let me take you through what you need to consider or look at when deciding on the dividend paying stocks, the key financial ratios that you have to look at. So the first ratio that we use is the dividend yield. Somebody might be asking, what exactly is the dividend yield? So the dividend yield is the return on your investment. This is the return that you will receive in the form of dividends, being the income from holding stocks of a particular company. You invest 5,000 in a company and you receive income in the form of dividends. So what is that income equating to in the form of returns? That's exactly what a dividend yield is showing us. Is looking at the income that you would be receiving from your stocks in the form of dividends. So how then do I calculate this dividend yield? If you already have a brokerage account and you are already in touch with a broker, you are going to receive weekly market reports. And when you receive these weekly market reports, some of these ratios are calculated for you. What you need to know is how to interpret those ratios and how to use those ratios in your day-to-day decision making when it comes to individually picking companies to invest in. So the dividend yield, we get it by dividing the dividend per share that you are going to get divided by the share price. Dividend yield, dividend per share divided by the share price is going to give you the dividend yield. This is now when I say that this information is changing, because as the share price is changing, the dividend yield is also going to change. But then again, let's look at the dividend per share. Which dividends do we use? Because we've got different types of dividends that the company will declare. Normally, when we calculate our dividend yield, we look at 2 dividends that you would receive. Here in Botswana, companies typically pay dividends twice a year. There is the interim dividend that you are going to receive. An interim dividend is normally declared on unaudited financials. This is the 6 months financials, and they will declare dividends based on that, and the financials are not audited. And then you will have your final dividend. Your final dividend, you are now receiving it on the full set of financials. This is the 12 months financials, and normally a final dividend is more than an interim dividend, just for the fact that interim dividend is declared on unaudited financial statements. So these are the 2 key dividends that we will use. Together they will form the annual dividend. Sometimes a company will pay a special dividend or what we call a bonus dividend. This would be a once-off dividend that normally a company will pay either from its huge cash reserves, or maybe for that particular year a company has entered into a big transaction that has resulted into big returns, and based on that they will declare a special dividend. So you're going to realize that this special or bonus dividend is not sustainable, and this is why we are not going to base our decision on it, because like I've said, it's a once-off dividend that you will receive. So we use interim dividend and the final dividend. This will give us our total dividend for the year. We will divide that by the current share price to get our dividend yield. That's the ratio number 1. Ratio number 2 that we have to look at when it comes to dividend paying stocks is the dividend cover. What exactly do we mean by the dividend cover, or what is this ratio telling us, the dividend cover? It tells us the number of times a company can cover its dividends from its earnings, from the earnings that it generates. How many times can it cover its dividends? So this is a very key ratio because it tells us how sustainable the dividend payments are. The higher the number, the better, because if it's high, it shows us the company can cover its dividend 10 times, 15 times, 20 times. So you're always looking for that high number. And if it's high, it also signals some sense of sustainability, because you don't want a company that is going to pay dividends this year and then in the next 5 years or 10 years there are no dividends. So that is not sustainable. You are looking for consistency of payments of dividend, because this is the income that you are investing for. So how do we then calculate the dividend cover? I'm not going to dwell too much on the dividend cover. I think I'll do a separate video where I would look at the dividend cover. But just for your knowing, we calculate the dividend cover by looking at the earnings per share divided by the dividend per share. That's how you get your dividend cover. Like I've said, we will create another video where we will extensively talk about the dividend cover. The last thing that you look at is the sustainability and the consistency of dividend payments. So here what you look at is sometimes it's good for you, not sometimes, it's always good for you that when you individually pick companies to invest in, you look at their history. If you're investing for dividends, you're looking for dividend paying stocks. So please go into these companies and look at their history of dividend payments. You just need to look at maybe the 5 years track record, 10 years track record. The reason why you are looking at this is if there has been some sustainability and continuity, it gives you that form of predictability that you are looking for, that this company has been paying dividends, therefore it will continue maybe paying dividends in the future, which is something that you want, because when you invest, you are investing in the future earnings of the company, but then the past performance will give you that predictability that you are looking for. So these are the key things that you have to look for. I know that you are dying to get to know the top 5 dividend paying stocks in Botswana. So the first one is Standard Chartered with a current dividend yield of 13.22%. 13.22% is the rate of return that you receive for holding the Standard Chartered stocks. Number 2 is Sechaba. Sechaba with a dividend yield of 12.24%. 12.24% is the rate of return that you get for holding Sechaba shares. Number 3 is Engine. Engine with a dividend yield of 12.23%. So 12.23% is the rate of return you will get for holding Engine shares. That's your number 3. The fourth one is BTCL, Botswana Telecommunications Corporations Limited, with a dividend yield of 11.04. 11.04, this is the rate of return that you will get for holding BTCL stocks. And lastly, number 5 is Absa. Absa with a dividend yield of 8.66%. This is the rate of return you will get for holding stocks or shares of Absa. 8.66%. There you have it. These are your top 5 dividend paying stocks as at the 21st of March 2025. Like I've said, this information is changing. I know most of these companies, more especially Standard Chartered and Absa, are soon to release their 2024 financial statements. So we will see how this information is going to change. We will see whether the dividend yield is going to improve or what. But remember also, the share price also will influence the dividend yield. So this is all that I wanted to share with you today. I hope that this information will help you as a dividend stock picker. Thank you so much for watching. I will see you in another video. Bye.